So sir is having a 15 years of rich
This call
experience
is now being recorded.
with respect to his banking career. Then also he was in the financial market. He was with the commodity market. He was he's also in like in a financial education. So apart from his rich experience in the industry, he's also actively involved and connected with the academics. He after his completion of MBA, he published a 12 research paper, and also he's delivering his expert talks. He's also imparting training and development with respect to sales, personality development, and financial education. So sir, we can say he's a highly active, and he's balancing his corporate life with the and also academic life. So I hope definitely, and I'm sure that students will going to get your great experience. So it's hand over to you, sir. Thank you again.
Yeah, thank you. I'm audible. First of all,
Yes, sir.
let me know.
Yes,
Yeah.
sir.
Okay. Okay. Uh, Thank you for the invitation. And since Divyang sir has told you all guys that I'm uh, in the academic as well, and I'm just also connected with the Parul University since last 2014, where I conducted my first session. And in a series of that, I think last session I conducted in 2019, before Corona. I conducted on the, I think it was on the real estate. So let us move on and cover this topic. Divang sir, please let me know what is the time, stipulated time for this session.
Sir, it is 1 hour, 7 to 8, followed by a
Okay.
question answer and doubt solving session, sir.
Okay, so we will try to finish it by 7:45, as 8 I do have another conference. So if in between also, if somebody want to ask some questions, they can just put in into the message box. And Divyang sir, if you can help me in having that question, so I can even in between can answer also.
Sure, 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 sure.
So
I'm
that
moderating the
will,
whole.
yeah, I won't get disturbed, because I'm not going to speak in a single flow. I did not mug up any PPT, so we can make it interactive, whereby I can help you guys with the some banking knowledge, and you can also help me if some additional knowledge I can also grasp from you people, right? So let us move with the next slide. This is my introduction, what the Divyang sir has already told you people. So I'm also the PhD scholar with the Parul University and verge of completing it. So uh, almost I think it will take more 2-3 month time, whereby I will be doing my the final interview, and I will be done with the doctorate degree from Parul University itself. Yeah, please go ahead. This all you told already. So investment banking, it's a division of the financial institution that uh, uh, help the government and the government help the corporate governance, and helping in the merger acquisition and this kind of activity. And certainly, a investment banking or a investment banker is a person who is arranging the capital for the corporates or for the government, for the financial institution, whereby the money could be collected from the again from the institutional investor. It could be collected from the Indian institutional investor, which is called DII, FIA, foreign institutional investor. In terms of IPO, the money is also collected from the retail institution, retail investor, and also collected from the HNI investor. So these are few categories: money from where the money is collected, and money is you know uh, 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 given to the corporate with the proper arrangement of the banking. So investment banker and the investment banking involves, investment banker is a person, and investment banking is a company through which all these things are happening. So next, please. This is the process. This is the two things what the investment banking typically do and covers: merger acquisition advisory and the underwriting. Merger acquisition advisory is a thing whereby uh, when the two companies are getting involved with each other, or two companies are one company is acquiring to another company. For example, uh, uh, in 2016, Kotak Mahindra Bank has acquired the ING Vysya Bank, and totally it was a part of Kotak Mahindra Bank now, and the that is called the acquisition activity. Merger is a activity whereby two entities are getting merged to each other, and the existence of both the companies are there, like IDFC First Bank. So first is also there, and the IDFC Bank is also there. Right. Underwriting is a thing whereby the investment banker are raising the capital, like through the IPO and everything. We will see in the next slide. And entire session is uh, on this part only, IPO part only. Please, next slide. So IPO, initial public offering, initial public offering. uh, why IPO is necessary? As we just seen in the last slide only, it is for the raising the capital, and for the raising the capital, who helping us? The investment banker helping us. So investment banker helps us, and the money is collected from the 4 to 5 different sources. Like earlier, I told you, these sources are the public, retail investor. These sources are the HNI, high net worth investor, QIB, qualified institutional buyers, and you can institutional buyers you can divide into the FII and the DIIs. Okay, next please. So this is one of the eligibility norms which I took from the source of this slide is from the one of the government website, where, whereby the same detail I took for you, whereby you can see and understand. So what is the eligibility? There are the given the six criterias under which a particular company should fit when they are launching the IPO. IPO, as I told you, initial public offer. It is for the raising the capital for a particular company. Uh, there are the we currently, if anybody can tell me the recent IPO which was launched. If anybody can tell me in chat box the recent IPO launch. Any answer for the recent IPO? Okay, Kirtan Patel, thank you for answer. Thank you. Angel Broking, I got it. Don't worry about spelling, I got it. Any other? So Angel Broking is a one of the correct answer. Equitas Bank has launched their IPO, and recently there are 4 5 companies like Ujjivan Bank, and these companies has launched their IPO. A few days earlier, we have seen the IRCTC IPO, which was one of the mega IPO and got successful. So why this IPO? Why? Yeah, thanks Devesh. Thanks Devesh for answer. So these are some recent IPOs which were launched, and these IPOs were solely for getting the so. Thank you, Mehul. These IPOs were solely getting for the capital for from the public or the institutions to so that the capital requirement of these companies should get dependency from the particular one source could get over, and they can expand. So I will come on that also, why the requirement of this IPO. Thank you, Dhruv. Thank you for answer. Eligibility for making this IPO. So net tangible asset, at least 3 crores is requirement. Okay, and 3 full years of which not more than 50% are held is the in the monetary assets. However, the limit is 50% on the monetary asset. So this is one of the clause, minimum of 15 crores of average pre-tax operating profit. So you must be knowing what is the operating profit if all they are the finance people. So operating profit is a profit which is declared by the company while they are making their balance sheet. It is different from the net profit, as net profit is declared after taxation and the all the expenses are done, right? Net worth at least once a year, 1 crores of net worth in the preceding 3 full year, and the company's existence should be at least 5 years, and the issue size should not be exceed 5 times of the pre-issue net worth. So these are some basic requirement. If any of the one of the requirement is not getting met, then there is a alternate route also, whereby a company can take the help of the uh, uh, investment banker, and investment banker can help the company with at least 75% of net offer to the public to be mandatory allocated to QIB, qualified institutional buyer. As I told you, institutional buyers could be the domestic, institutional buyers are could be the foreign institutional investor also. So our investment banker should you know uh, give the assurance to the company who is raising the capital, uh, that 75% of the offering could be taken by the institutional buyer, because these are the people who can take the entire fund, who can help you to get the entire fund and can make your IPO to get success. Yeah, next slide please. So why IPO? As earlier, I just took some point why the IPO, a company launched the IPO for funding needs. Yes, for the funding need, it is required for uh, for funding global requirement, for joint ventures and the collaboration needs, for funding for the infrastructure, marketing activities, distribution. If you want to expand your distribution channels, finance, working capital requirement. If working capital requirement is generally raised by the companies who are into the manufacturing segment. For example, a company uh, want to make some material and want to export somewhere out of the country, or want to send somewhere inside the country. So if the payment terms, if for example they are sending some material and getting some material and getting the payment, and if the payment cycle is for example 3 month or 4 month, then the in between time to make a new raw material, the company may suffer. So this is kind of working capital. So these companies can come to the bank and ask for the after can ask for the overdraft facility or cascade facility. But IPO is one of the route whereby they can take the if the company is such a big size, and they can take the help of the investment banker, and can they raise the capital. So repaying the debt to strengthen the balance sheet, repaying the debt to strengthen the balance sheet. There are the many example in the recent past, whereby company has launched the IPO, or company has launched the FPO. The brother of IPO is the FPO. The IPO comes first and the FPO comes second. So the company launched this kind of thing to get the money from the outside, and they can repay their debt in order to make the company cash rich or strengthen the balance sheet, uh, meeting issue and the expenses. And for non-funding need, enhancing the corporate structure, retention, and the incentive for the employees through the stock option. You must be knowing the stock option. Stock option is an option whereby a company also distribute their shares to the employees in a subsidized rate of particular company. For example, I am in a Yes Bank, so if company want to give me some company want employees at particular grade or particular level, that they should also, part of the company, and should also be they want to make the they they want to make the involvement of these people. So instead of bonus, sometime company distribute the shares at the subsidized rate, so that employees also get benefited. Provide the liquidity to the shareholders. Next slide, please. So if any of the guys, if you want, if any terms you don't understand, just give me in the chat box. I have opened my chat box, so I can resolve the queries at a very initial basis, or at the same time. Type of if if somebody is there who don't understand that the facing the issue in the only the monotonous language of English, they can chat me. I can use sometime Hindi and Gujarati also. I'm fluent with that as well. Type of investment in the IPO. So just I told you few minutes back that there are the different type of people. This is the one of the IPO allotment. I'm not. I have just intentionally just redact the name of the company. This is the allotment, recent allotment by a company. Who has given the shares to the different category. Like first category is pre-IPO allotment. uh, Pre-IPO allotment is given to the private equity firms who are the funding the company at the initial basis. They could be the angel investor, they could be the people who have supported the company from a very scratch level. Key qualified institutional buyer like mutual fund, bank, financial institution, and the foreign institutional investor. HNI is a high net worth uh, investors who are investing in an IPO with the amount of more than 2 lakh rupees. Retail investor who are investing in a company between 0 to 2 lakh rupees. And other investor could be the employee and the existing shareholder. They can also the are buying the shares in a particular company. So these are the mot, uh, these are the five categories whereby in which the people are investing in an IPO. Next, please. So, see, there could be, seven steps in the IPO process. This is the main agenda of today IPO process. So, there could be a seven step of IPO process. There could be a nine step. If if I want to make it a very simple, I just took the gist five steps in the IPO process. Uh, uh, if you just Google it, search it, you will find the lots of steps. Even I found there are 20 steps also. IPO is such a thing. If you want to make it very simple, this is very simple to understand. If you want to make a very critical, there are lots of things happening which is inside the company, which by not known by the investor. Like for example, an investment banker, how they are collaborating between the how they are managing the stuff between the investor and the company who want the investment. Who So these are lots of things whose are not on the paper, but they are managing. They are just sometime manipulating and sometime helping the investor, helping the these companies, so that they can come together, just coordinating with the regulators like the SEBI. They are just take the help of many of time. RBI does not get involved in the IPO process, but sometime some clauses are there due to investment bankers are generally banks, so they are, that kind of things are happening, and the investment banker are passing all these through things, and it is happening. So IPO process generally consists of, according to me, it's a 5 step process. So these are the, select underwriter, uh, or you can say select the investment banker, or the who just get the, finances done for you. You are filing the due diligence. A very famous due diligence is done by during the IPO process. Can anybody tell in the chat box which is that? A very famous due diligence is done by the during the IPO process. Many of the guys must have listened also. Is there any answer? Okay. So my question was again, a very famous due diligence process while the IPO process. If somebody recollect, can answer in the chat box also. Pricing, stabilization, and the transition. Transition is a last space whereby, the IPO got launched on the stock market, and and the things are, done, and the investment banker just look at how it performing, and after the 30 days, the role of the investment banker gets over, and the, things are in between the stock and the particular company, or you can say the things between the regulator, exchanges, and particular company. So so there are the, if you googlize, you will find that the first case of the, raising the capital, or you can say in the simple language IPO, is the Dutch East India Company, who has firstly raised the capital from the market. It was in the 1600. It is so called that before this regulator SEBI has came, Reliance was the first company who has launched, raised the capital from the market in 1977, 77, and it is also said the first company to list on the BSE is the DS Prabhudas and Company, which is the short name of the company DSP, and currently it is known as DSP Merrill Lynch because it has did the tie up with the company called Merrill Lynch. That's why the full name in all the paper and everywhere is DSP Merrill Lynch. Next slide, please. Select an investment banker. When you are selecting an investment banker, there are the, few things are there. You are looking at the reputation of the investment banker. For example, you are selecting yes bank, or yes capital. So yes capital is also an investment banker. You are selecting, for example, ICICI Direct, is its investment company. These are the Indian companies. I'll just come on that. I also made a slide, which are the top 10 investment companies. Like Kotak is also one of the investment banker company. So you are looking at the reputation that the person, that a person who is, uh, you are appointing as a company, as an investment banker, they are able to get the capital for you or not. So reputation is very important. What quality of research they are having, industry expertise, how many says how many IPO they have launched, what is the experience of them, distribution, what is the reach of them, uh, prior relationship with the investment bank also. So these are the few points which a company look at when they select the investment bank. Next, please. Due diligence and the regulatory filing. As I told you, there could be, four type of things in the due diligence. Firm commitment, that what is the commitment. Firm commitment means this is not about firm, but this is about firm commitment, like a investment banker commitment to the company who is raising the capital, that that Mr. XYZ, I will get you your entire IPO get subscribed, and I will get you this much money. Best effort agreement is done by investment banker while they are not sure that how much capital they will be raised. So the best effort agreement is done. All or none agreement means investment banker do a agreement whereby they are telling that if 100% is not done, we will leave the IPO. Syndicate of underwriters, many of time it happens that companies not sure about not having don't have confidence on the one investment banker. So what they do, they hire multiple of investment banker, whereby one banker is a lead banker and the other are the supporting investment banker. Next please. So IPO lead manager. So Kotak Mahindra Capital Company has experience of 108 IPOs. uh, there is another company, if you see, Control at Capital Advisor Private Limited 100 IPO, Axis Capital Limited 91, ICICI Securities 89. This is the Arman Financial Services 60, sorry 71, SBI Capital Limited 65. So these are companies. This data is also taken from the source of data is one of the regulator website. So lead managers for the IPO process end to end, they are doing some of their responsibility include the IPO processing, creating the DH, DRHP or RHP. Can anybody tell what is the full form of RHP? If somebody is from the banking.
Red herring prospectus.
Very good, very good. Who said this? Nilkanth?
Nilkant. Yes, sir.
Yeah, thank you so much. Thank you so much. Absolutely bang on. So earlier also I was asking this question. What is the one of the major document? So red herring prospectus is a document which is very initially filed by a company, very initially filed by the investment banker to the SEBI, and it don't tell about the pricing of the IPO, but it tells about how it is going to be launched, what are the pros and cons, the company detail, the it is qualifying or not. The all these details are red herring prospectus, and it is very at a very initial stage and very important document. Next, please. So these are this slide I took to just make you understand how this work. For example, IDBI is a front runner lead manager, and SBI, Yes Securities, and the another companies helping another company is helping them to to get the investor on board. So this is one kind of arrangement. Sometime it may possible that Yes Securities could be frontline lead manager, other are follow up lead manager, and this is kind of that. Next please. Step 3, pricing the success and failure of the road. Pricing, there are the different parameters are there. For example, a company which is very well known, like company called IRCTC. Everybody is traveling from railways, uh, and it is a very famous known. So everybody would like to buy the share of the particular company and want to apply. If particular company having the less known name, then what will happen? The company will do the leafleting, company will do the make the hoarding, boarding, road shows, and this kind of activity to set their pricing. The company's goal, condition of the market economy, these are the market economy. Market economy is very important thing. For example, any one of uh, uh, can anybody tell in the corona period, especially in the April, May, June, stock market was working or stopped? Exchanges, the Exchanges were working or they were not working? Can anybody reply in chat box, please? Uh, if you feel yes, you can write Y. If you feel no, you can write no. N. Y or N? How many people know? Okay, thanks Divesh, thanks Kirtan, thanks Minakshi. Okay, two, three more answers, please. Y and N. Okay, so yes, absolutely bang on. The stock market was working. Why I asked this question? Then why there was no IPO launched? There was no IPO launched during this process. Sorry, during this period, because of the economy of the market economy was not good at that particular time. So no company has took the risk to launch IPO, and after particular time, uh, please excuse me. There is an urgent call I need to take. Thank you for bearing with me. So, so particularly market economy is very important for the pricing. Company's goal is also very important because they should know that how much capital they want to raise from the market, and the success and failure of is very important where the company is a less known name in the market. Next, please. Stabilization, also known as the green shoe option, is a legal act for underwriter. What happens sometime if a company is launched, company goes on the exchanges. Which are the exchanges, major exchanges in India? Can anybody name in chat box which are major exchanges in India? Thanks, Hemlata. Thanks, Hemlata. NAC and BSC, you are bang on correct. So NAC and BSC are the major exchanges on India. So, for example, during the IPO process, this is the process whereby a company already listed on the stock market, and once the company is listed on the stock market, the price will go high or price will go low. So these are the two situations it will happen when the particular stock will be traded on the stock market. So if it is trading at particular price, trading at the uh, 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 not very higher, not very lower price, then it is okay. If for example a company, a price of the share goes very down, then what the investment banker having the legal option, that is called the green shoe option, whereby an investment banker can buy up to 15% of company share. For example, company has 200 shares with them, and in the IPO company want to raise the capital by selling the 100 shares. So in IPO 100 share were sold. So what the investment banker having the option, they can take 15% of share from the resort, and they will use when the company's share price will very go down in a drastically, they will buy those. If company's share price will go very up and it is a marginally up, even they having chances and option to sell those shares at the time of when these investment banker are booking the profit by selling the shares. The profit will not go to the investment banker. Investment banker will get the margin or the money on which they are working, but this profit will be getting by the company only. If the price is going down, at the down price, investment banker will buy those shares, and those shares again would be at lesser price for the company only. Next, please. So this is one of the aspect. If somebody want, they this slide is available on the Google also. So if investment banker buys or sell these stocks, their 30 days closing price, 30 days period in which, if for example a company has bought the shares, they need to sell it. If they have sold the shares, they need to buy it after, between the 30 days, from 0 to 30 days, when they feel that the price is stabilized of the company. Next, please. Transition to the market competition, as I told you, uh, after the after the trading done starts 25 days after the initial public offering done. During this period, investors transition from relying on the mandated disclosure prospect to the relying on the market forces for the information regarding their shares. Uh, After the 25 days period lapses, underwriter can provide the estimate regarding the earning and the valuation of the issuing company. That company can these the investment banker are generally giving the valuation that they are observing, that they are uh, how they are functioning at the stock market. For example, a company is launched, for example a bank share is launched on the stock market, or IPO is done at the stock market. So what is the current price of that stock market and the market capitalization? It is equal to equal to market capitalization of the related company, or not equal to market capitalization of related company. So this is a big question. So transition to market competition is very important, because a company of same size, for example two bank, like if take the bank A and bank B, if their book size, for example their CASA book size, their investment book size, and their the loan book size is same, but still they are not able to, the share price is very much difference. There is a difference in the share price. What the role of investment banker is not over. They should again uh, take the can can help the company who has raised the capital regarding the earnings and the valuation of the issuing company. Next, please. Matrix for judging the successful IPO. This is one of the formula. आप ये market capitalization, stock price into total number of companies outstanding share in the market. This is just earlier in the previous slide I told you the market capitalization. So this is the formula by which a company are calculating the market capitalization, and IPO is considered to be successful if within the 30 days, if a peer company's market capitalization is met by the newly launched company. Next, please. Important terms. I told you about the lead manager. Lead manager, a merchant banker, a banker processing a valid SEBI registration number. According to SEBI Regulation Act 1992, is eligible to work as a uh, book running lead manager, whose name just we have spoken as a underwriter also. We have spoken as a investment banker as well. Red herring prospectus is a preliminary registration document that is filed with SEBI. If any IPO details related to IPO, if you are reading, so these are the things which you will generally you will refer. Book building is a systematic process of generating, capturing, and the recording investors' demand for shares. Usually, the issue appoints a major investment bank to act as a major securities underwriter or book runner. Sir, what is the role of the lead manager? Uh, don't confuse between the lead manager and the investment banker. Divesh, a lead manager, a investment banker is the same thing. Book running lead manager is a person. If there are the three, four lead managers, there are three, four lead manager. One would be the major main lead manager, and other would be the secondary lead manager. Earlier, I share the slide of uh, where the IDBI Capital was the front running lead manager, and the Yes Capital, Axis Capital was the second lead manager. This is not, sir. Go back, go back. Yes, this one. So these are the investment banker. These are also the lead manager who are, helping the investment company to get the fund from the QIB retail investor, HNI investor who are subscribing for the from the IPO. Next, please. Thanks, Devesh, for asking the question. So important terms in IPO, you are there. So next slide. This we I think covered. Registrar of the companies, when the IPO is filed, the registrar of companies plays the important role. They are, the there is a 7 days time when the registrar of company tells the SEBI that they should, if there are any queries from their end or not. SEBI is currently thinking that the time for this period, they want to reduce from 7 days to 3 days. This is the current scenario which is happening between the SEBI and the registrar of companies and the finance ministry. Next, please. Book building issue, retail individual investors, non-individual investors. As I told you, there are the different kind of. Earlier this was ratio was 35 15 50. So a qualified institutional buyer should get 50%, uh, non-institutional investor 15%, and the retail individual investor 35%. This was the ratio earlier. This was the ratio earlier, which was guideline given by the SEBI. And there are the different routes. Don't get confused. In the second slide, which I told you, that 75% QIB buyers is buying, which was the second route. So don't get confused in between. The ratio is changeable. In case of book build issue, are made to the requirement of mandatory allocation of 60% to the QIB in terms of rule 19 to B. See, there are the different rules and the regulation. As I told you, we cannot go very deep, but you can Googleize, you can refer these rules. 1957 SCRR, Security Contract Regulation Act, provide the requirements which shall be compiled with the public companies for the purpose of getting security listed on the stock exchange. So these are the rule. You can Googleize, because one session can be done entirely on the securities contract regulation rule. But this is what the very simple definition, third paragraph, which you can refer. Right? Next, please. Offer document means the prospectus in case of public issue. One of the offer document is red herring prospectus. So these are the offer document which need to be filed to the registrar of companies, and registrar of companies take their time of approximately 7 days and make their decision if there any amendment of not. Draft offer document is the offer document at the drafting stage. This offer document at least 21 days prior to filing the offer document with the ROC. So these are some type of document which you are filing with the SEBI and the company of registrar, and they are giving the node if there are any amendment or any confusion or any ambiguity. They are just referring back to the investment banker, and they are again with the concern of the company who want to get the money from the IPO. They are just take the help from the uh, uh, investment banker, and mutually with the mutual consent they again represent to the SEBI. Next, please. This is the one more IPO process. I told you there could be different steps. So this is the one more thing. You can take a snap, available on Google as well. Next, please. Timeline before launching the IPO. IPO is a long process, a long process. So these are the few timelines after the effective date, offering day 1 to 10 day, what will happen 20 days and 12 months. So these are some timeline. uh, these are timeline, given by the regulator few months back. If some latest amendment came, I'm not aware of that, but this was at least 6 to 8 months back. Next, please. Right issue when listed company with there are the there are the after the IPO launch, the stock is IPO launch processes happened, share is started trading, then there the company want to add some more capital, then there could be a right issue when the listed company which processes issue fresh securities to its existing shareholder. IPO IPO is given to the new shareholder because company is in the market first time. But a right issue is a issue where the company is giving to the existing shareholder, normally offered to the particular ratio of number of security. For example, my name is Anilkumar Nirmal. I am holding a 10 share of Reliance having the right to issue a share in the ratio of 10%, 20%. So if 10% Reliance on the one share, Reliance can give me issue, uh, issue a one share to me. I am the existing shareholder. So this is one of the example. This route is best suited for the company who would like to raise capital without diluting state of its existing shareholders, unless they do not intend to subscribe to the entitlement. This is just a layman definition. I tried to make it very simple. Next, please. So preferential share issue. Share or the convertible security listed on the company. This is not a part of IPO process, but this is a additional knowledge which I am imparting with I'm sharing with you under section 81 of the company act 1956, which is neither a right issue or not a public issue, which is called a preferential issue. This is faster way to raise the capital from for the company. The issue company has to comply with the company act. So these are some act you can, as a student, you can Googleize, you can get all these details. So you must be having some more detail in depth idea about. Thank Next, please. So IPO that saw the highest subscription. This is the I told you at the starting of the session. I will share one of the slide where few IPOs detail in 2017. If the first slide if you can see Salasar Techno Engineering got the 277% subscription. July 25th, 2017. So date is given and the subscription is given. So it is not necessary that, for example, a company is issuing a share, launching IPO. So what will happen? A number of people will, fill that IPO. There could be a fixed price IPO. There could be a, you know, earlier we have seen the terms called book building. So there could be a book building kind of IPO. If launch a fixed IPO, for example, I want to sell my company share, I want to launch my company's one share at the price of 200, nothing less, nothing more. So this is a fixed IPO. I can go with the book building option also. I can, get the idea in the entire market. I can do the research marketing activity with the help of investment banker, and I will give the range that my upper price is 201 and my lower price is 198. So people have to bid on between 198 to 203. So I will choose that to which people, to which investor I want to give. So first of all, what I will do, I will take the people who has bidded on the highest price, and then I will go down one by one, step by step, and I will go up to the 198. Okay. Next, please. So fundraising, as I told you, FPO is the brother of IPO. The fundraising could be by a company, could be done through IPO or FPO. Uh, in the case of IPO, as I just explained, the fixed price IPO and book building issue. Book building may they are giving the range. Fixed IPO and they are giving the only fixed price. FPO, diluted FPO, non-diluted FPO. Just will come later on this. Next, please. So different between IPO and FPO. So this is the comparison. IPO, what is the IPO? IPO is initial public offer, offering the first time company is getting launched. FPO is a company is already existing in the stock market. For example, Yes Bank share was already existing in the stock market, and just recently 4 5 month bank, uh, 3 month back, Yes Bank has launched their FPO. So after launching the offer, after launching the FPO, the company, company is diluting their existing shareholding, and giving to the investors like a qualified or financial or HNI or retail, and they are getting money from the market. So as there was term written, the diluting and non-diluting. So if company is giving share from their holdings, this is the diluting. If the company is asking the investor that I can, you can, I can buy their sorry, without reducing their stake, they are launching the FPO, that is non-diluting FPO. uh, meaning is written. Issuer could be the, IPO could be the unlisted company. FPO could be the listed company, as I given the example of Yes Bank. Raising capital through the first time public, through the subsequent public contribution. Risk in initial IPO is high because you are hiring, you are doing the entire process, but your company, you don't know that what would be the, final outcome of that particular IPO. But in FPO, already you know that my company is doing good, my company's reputation is good, and I can raise a good capital from the market. Okay, predictability is less in the IPO and more in the FPO, as I told. Profit in higher than FPO. FPO में, IPO में, you don't know. So it could be the, it could be the go very high, you could go low. So if you are going very high, then you are good to go. In FPO, you are less predictable. So you know what is the fixed range of profit you are going to get. Next, please. ASBA is the last slide. ASBA, application supported by blocked amount. When you want to apply, how you will do, how you can apply for the IPO. Can people tell how many people do have the Demat account?
Yes, I have, sir.
If Okay, Nero, thanks, Nero. Can people write yes, no? How many people? Okay, thanks, Yamlata. Yes, okay. Thanks, Nero. Thanks, Divesh. Thanks, Minakshi. Thanks. So many people having the Demat. Very good. Uh, so application supported by blocked amount. Earlier, what was happened before this process? That, for example, IPO, a price of one lot is, for example, for 15,000 rupees. So you need to pay the check of 15,000 rupees. Once you given, your check will be, debited from your account, and the company will hold that fund for certain of period of time. If share allotted, it will be credited to your Demat account. If share not allotted, your money will be refunded to your bank account. But in that particular process, there were the things whereby many of times share also not allotted, and people were getting very high time to get their money back. So what the SEBI has done, they have launched this kind of application supported by blocked amount, whereby money is blocked in your bank account only. If share is allotted to you, at that particular date it will be debited. If money is not allocated to you, there would be a lien on that particular amount in your bank account. Your money will be released. So your money is not going out of your bank account, even you are getting the interest also on that particular money which is lies in your bank account. So this is a very good thing. Even Yes Bank is opening the digital demat account. You can open this demat account within 15 15-20 minutes by sitting at your home. Thanks. Next please. Thank you guys for listening very patiently. If any questions, I think we completed in the exact time.
Yes, sir.
Uh,
You are on
yes, sir.
time, and
Yeah.
like I was observing that you are like busy and giving some sign to someone. So if you permit that, if anyone have a question, we'll have a limited question, one or two.
Yes, sir.
So sir can continue with his session
Yeah, yeah.
because
Please.
he told that he had some meeting at 7:45 and he continue with us. Yeah. So if anyone have a question, we'll have a two or three question max.
Yes,
Yeah,
I
yeah,
have a
please
two
go
questions.
ahead.
Yeah. Yeah,
Questions.
Niro.
The first is how the IPO price is decided. It is decided by a banker or company, mature banker or
No, no.
company.
See, banker is a wrong word. First of all, you should say investment banker.
Okay.
Okay. You should say investment banker or underwriter or lead manager. These are the three terms. Coincide.
Okay, and sir, second question is just few days back, Jack Ma Alibaba Group and IPO was cancelled. So, as what reason the IPO was cancelled? Could you please explain
See,
that?
yeah, yeah. See, I don't know about that particular company. Okay, but yes, I can tell you. As earlier I told you, a lead manager or an investment banker doing lots of research that what kind of after launching the IPO, what kind of result, what kind of subscription they will get. If I'm launching, I'm selling something. If there are no buyer of that particular thing, what I will do? So my entire process will get failed. My the money, what the money I have, spend on the marketing research activity will be get failed. So it is very necessary to get the research work done before launching this IPO.
Okay, sir.
So
Thank you so much, sir.
so by doing the research, they must have known that it is not going to get successful. This could be one point. Second point, they should not got the SEBI node because of as I told, registrar of company should also allow register. It is not approving authority, but there should be if they have raised some queries and they are not able to resolve those queries, then also it could happen.
Okay, sir. Thank you so much, sir.
Yeah, welcome.
Any questions? Parina, Divyesh, Nilkant, Shalu, Hemlata.
No, sir, no questions.
Okay.
Okay, thank you so much, guys. Thank you so much, guys, for keeping patience as listening very carefully and answering on the chat box. I'm delighted that very interactive people you were there because because I don't in the starting session I told Divyang sir that I don't want to talk to the wall. So if you can help me with sharing those slides, so at least I can interact with you guys, right? If I don't have any feedback forms or anything. Uh, right, you can give those feed if your session is very fruitful for you and knowledge sharing. You can share with the university. Uh, it may possible in the coming time. We can conduct some more session. Thank you. If university wants.
Thank you, sir.
Thank you. Thank you.
Okay, sir. So we are concluding the session, and I hope I'm sure it's not. I'm sure that they gain lots of things like a new word, the pedagogy of IPO, the process, the thin line difference between the investment bankers, lead managers, and the merchant bankers. Thank you very much, sir, for your valuable time, and we are
Thank you.
concluding the session, sir. Thank you, sir.
Thank you. Thank you so much, sir.